the turnaround's mostly done. We've gotten the company out of the ditch. We have stabilized everything. We have fixed the balance sheet. So the journey so far has been from broken to good. The next phase of the journey is really the good to great journey, and that's what I'm actually very excited about, because if we've been able to do all of the things that we've done over the past 4 years with a lot of constraints, a lot of shackles, the exciting part is what we can do without that.
So when you go from good to great, does that mean like a lot of buybacks and dividends? Does that mean, what is that?
Look, it's a lot of different things, but ultimately it is creation of value. And it's creation of value for our customers, for our employees, and most of all for our shareholders. But it's doing that with continued focus on greater cash generation, which comes from better margins, better improvement in the way we manage our net working capital, but also ultimately better investment. So our real goal is to make sure that we've got world-class return on invested capital.
Now that I see, as an outsider to the energy industry, I see a lot of M&A activity there. And being a former banker myself, that's what hits my radar screen. How do you guys think about M&A for your business now that you are on maybe firmer footing?
Correct. For the first 3 years, M&A was a bad word. Weatherford actually built up on a series of acquisitions and a lot of issues with that, especially around the lack of integration. So the first 3 years that I've been in the role, we really focused on the organic capabilities of the company, building out the portfolio, making sure we fix the operating intensity and the rigor around the company. But we have now gotten to a point where M&A has become a very important and salient topic. We actually just exercised that muscle for the first time. We announced 3 small acquisitions back in February. So 2 in the wireline technology space, 1 in a very exciting space in intervention, which really gives us capability in slot recovery and plug-in abandonment, which is a very key part of that energy transition. So we have started to do that, and I think there will be more to come because we've now got a balance sheet that allows us to do that, and more importantly, a team that understands the importance of integration and is learning how to build that into the operating cadence of the company.
And just to give our listeners a sense, your services are the life cycle. How do your services differ than, say, one of your competitors? And how do you sort of invest for the life cycle of a well for a customer?
Sure. So in oilfield services, there's a lot of companies that do a lot of things similarly. So we've got what differentiates us. We've got a portfolio that provides core OFS services. So everything from drilling services to wireline, etc. But we're also able to complement that with what we call specialty services, things like managed pressure drilling, tubular running services, intervention services, etc., that very few, if anyone, has. So that combination of broad-based services that allow us to go toe-to-toe with the larger peers in the sector, as well as then these specialty products and specialty services, give us that differentiation and also allow us to have higher margins.
I keep joking to Alex, with oil at $80 a barrel, I'm going to drive down to Texas and start drilling some holes. I mean, isn't the cost like $40 and $80? I can make some money there, but I don't see a whole lot of drilling activity. What's going to take it for the industry to take advantage of these prices here?
Look, I think the industry has really embraced this concept of delivering returns for shareholders. And so I think there's a lot of discipline, especially around managing capital within the industry. That's further exacerbated by the wave of M&A that's happening, which again goes back to driving higher returns. So I don't think in the US there's going to be necessarily a sea change at the range of oil prices that we are seeing right now, which I think in the longer term is actually good for our sector especially. It creates a balance versus the seesaw effect that you see in the cyclicality that we have seen in the past. We also have a very robust international market. So for Weatherford, less than 20% of our revenues come from North America. The bulk of it is really an international orientation, international leverage. So, we see a very healthy market. Now, the U.S. is still the largest market in the world. We see a lot of activity, but it is something that is driven by capital discipline by our customers, which is a good thing.
And when we have M&A too, does that eventually lead into less business for oil services companies? Because in theory, maybe an Exxon Pioneer going to drill 10 wells rather than 20.
Yeah, I think, look, we are seeing a lot of drilling efficiencies. We are seeing the rig count go down. But I think it all comes down to differentiation. As long as companies can differentiate and deliver value to allow our customers to make greater headway on their efficiencies to generate higher returns, I think there'll always be business. Again, it is the largest market still.
I mean, I'm looking at your income statement. I mean, roughly half your revenue, Eastern Hemisphere, half Western Hemisphere. Give us the economics of both of those, your domestic markets versus your international markets.
historically, North America was a very profitably challenged market for us on a profitability
That's
basis.
a nice way of saying that.
Yeah.
Right. So our team's done a fabulous job over the past few years, really changing the way we run the North America business. So today, the profitability across all of our geographies, all of our regions, is pretty much in balance. So, and I think, I've always said the litmus test of our turnaround has been what's happened in the North America market. Over the past year, we've seen revenues decline in North America, but the profitability has actually gone up. So that's a real testament to what we've been able to do at Weatherford and the operating rigor, the operating intensity that the team has put in.
What are you doing on the energy transition space? Where do you play in that?
Yeah, so first of all, Alex, for us, it starts with this whole space of plug-in abandonment. We think that's going to be...
What does that actually mean?
Yeah, so what that is the responsible decommissioning of mature oil and gas wells. So as oil and gas fields stop producing, customers want to make sure that those wells are plugged properly so that you don't have any risk of leaks from them and you don't have any environmental damage. So we play a big role in that, and we have bolstered our portfolio with the acquisition that I just talked about earlier this year. So that's a huge space, and we think that'll be something that'll play out over several years. So, that's number one. The second element for us is geothermal energy. We've been a leader in geothermal for over 2 decades, mostly driven by our capability in high temperature tools. We've had a capability leading to very high differentiation in high temperature, which, as you can imagine, is important in geothermal. But we're now extending that beyond just drilling. So multiple aspects of the geothermal loop. We've got partnerships with organizations like Serafi, with Ever, which is a Canadian company doing some very novel work in geothermal. As geothermal shifts from this whole notion of you've got to be somewhere near a volcanic region to now in multiple parts of the world, in cities as well. I was in Hamburg about a year ago, where they're drilling wells in the middle of the city itself, providing district heating, etc. So geothermal's a big platform for us. The next one is CCUS. Now, CCUS is a huge ecosystem.
Carbon capture, utilization, and storage.
Sorry,
Nice.
Yeah.
It's a huge ecosystem. We don't play in a lot of it, but where we do play is in the storage and monitoring aspect of it. So again, this is where our technological capabilities lend themselves more directly. So that's a huge space for us. Sort of leading to that or away from that, but somewhat tied, is whole emissions management and emissions monitoring. We recently just announced a agreement, an MOU that we signed with Honeywell in this whole methane emissions management, which brings Honeywell's state-of-the-art technological capability, especially around sensing, our access to our customers' oil fields. We are also the only OFS player to have its own SCADA system, a data acquisition system, built on top of our production optimization platform. So that's an area that I'm very excited about. And last but not least, solutions mining. So that's a big area for us.